What's going on? What's going on? It's your boy, Storyteller Jet, with another episode of the That's So Fire Talk Show. And today we have a special guest with us here, Marcus Krigler. Man, it's super excited to have you on the show. I can't tell you how, since ever we started this show, I wanted to have you on the show because I really love all the great tips and tricks and things that you've been sharing on social media. By the way, congratulations on all those really great things that you've been doing.
Thank you.
I'm super pumped to have you on the show today. So today we are going to talk about financial excellence. Are you ready? Let's go, baby.
Let's do it.
Marcus, let's do a quick introduction of yourself. Who is Marcus Krigler? And we'll dive deep into the conversation today.
Yeah, so who's Marcus Krigler? Is this a therapy session or is this a little bit about business? Because we can really get deep here. We can really get deep here. No. So I own an accounting firm. So what we do every single day is we help people save money in taxes. We help people understand their books. And we help people really make profit from their books. So that's what we do. But from a really practical and tactical standpoint, I own an accounting firm. We work with real estate entrepreneurs across the country. And that's what we do every single day. We're helping them save money, make money, and build more wealth. That's kind of our tagline.
This is awesome. So I don't know, how long have I known you now, Marcus?
Well, probably close to 10 years, close to a decade at this point in time.
Yeah.
We got to be getting there.
Yeah. So I've originally met Marcus at the Collective Genius, and this week has been the meeting here in the Tampa Bay area where, the top of the crop, the cream of the crop, real estate investors gather together in a community called the Collective Genius. That's how we've met, I don't know, almost 10 years ago. And this meeting is happening this weekend. There was no better time to bring you here. We've been talking about doing this for a while now, and It's finally here. Super excited.
Yeah, I was glad we were able to make it work. So we thought maybe we could make it work on the front end of the trip, but I'm glad we're able to make it work on the back end of the trip because also I've got a whole 3 days worth of kind of updated information of what's going on in the real estate industry, what the real estate entrepreneurs are doing right now to be successful. So I think there's going to be a lot of good stuff for us to talk about right now.
Absolutely. So a really quick shout out to CG. I absolutely love this group. I've been their resident videographer for over 7 years now. Yep. I can't tell you enough how great this organization is. Providing so much value to everybody. This week was fantastic. They talk about AI. They talk about a bunch of different really great things.
They did a great job, right? So when you as a business owner, there's so much to business, so much more to business than just sales, right? We got to bring revenue in the door. Obviously, that is the gas of the tank, if you will, that keeps everything running. But what I have always applauded CG at doing is bringing in not just the sales and marketing piece of the puzzle, but also you've got leadership, you've got how to coach your team, you've got how to hire, you've got how to fire, you've got you've got all of these great things, and then you add technology, AI, all of this thought leadership together, and then sales on top of it. They do a really, really good job with that. So kudos to them.
Absolutely. So if you are a real estate investor looking at this, watching this video right now, I would highly, highly encourage you to go check explorecg.com to see how you can potentially become a member, because there is so much value in this organization. I'm even wearing their shirt right now. So shout out to you, CG. Let's go, baby.
There we go.
So Marcus, let's get started. Where did your entrepreneurial journey start?
Yeah, well, I think it really started when I became an accountant, right? I think, naturally my natural inclination is to go after and earn what I want, right? And so when I was young, I was a basketball player, and I wasn't always the most athletic. I wasn't always the biggest. I wasn't always the strongest, but I would always work hard and go after everything that I was able to achieve. And so that's what I loved about kind of the game of entrepreneurship is you get rewarded based off of the effort that you put into it. And so when I kind of got into accounting, I realized that accounting is just the backbone of entrepreneurship, right?
Yeah.
Once you understand the financial side of books and records and how it all makes sense and how it all works together, then the business side really becomes a lot easier. And so I kind of, a lot of people get into entrepreneurship, they I can do sales, and then they figure out all the numbers and the financials later. I kind of went backwards. I got in, understood financials, understood accounting, and then bought out, got my own business, and I've been doing that since 2020. So I kind of did it backwards, right? I saw how to run a business from the inside out, and then started my own, and have been doing it for almost 5 years now.
That is fantastic. And as CG, you are one of the most well-respected members over there.
Appreciate you saying
work
that.
a lot with a lot of the investors in that group. They are clients of yours, and also you are a wealth of knowledge. And I think I messaged you multiple times in the past, and I just, tell you, hey man, keep it up. All the content that you're posting on social media are fire. Yeah, it's awesome, and you're a thought leader in the group in CG as well. So super excited to have you on the show, and I think today we're going to talk about a lot of really great topic related to financial excellence. So I'm really excited to dive in with you. You talk about, is it gonna be a therapy session? It might be for me because I might be sitting over here and kind of asking you question as a therapy for me, I guess.
Fair enough.
Cool. So it's been 5 years, and you've been working in the financial industry. Can you talk about the entrepreneur journey from when you started it and how those past 5 years has been for you?
Yeah, well, I'll back it up even maybe a decade. So I got a really good opportunity right out of college to be an intern with an accounting firm locally in my town. And as I got that opportunity, that firm empowered me to be kind of a business owner within that company. And so, if you are a business owner today and you want to, achieve success, one of the things that you've got to realize is that you've got people in your organization that want to be empowered and want to act like a business owner. So you need to let them do that. And so one of the things that these two partners that I worked with gave me the opportunity to do is kind of build a business within their business. And while we're not currently partners anymore, we ended up parting in a way that was a great exit for both of us. They are super duper successful today. We've been able to have some success today as well. And so what I would say is that the entrepreneur journey is slow, and it's different for everybody. And what I got the benefit of is I got to figure out a lot of the entrepreneurial stuff on somebody else's dime.
That is fantastic.
Yeah. And then once I kind of figured it out and understood it and kind of made my own name and was able to go out on my own and feel comfortable with it and have the savings. I'm an accountant. I'm not just going to step out and go and take that leap without some certain confidence in it. And so once that happened, then I was able to kind of take that leap, and then, we've grown, leaps and bounds, almost more than 10x what I originally bought out of that organization. But I will tell you, it was not while that sounds like a lot, it was not a fast growing process. It was deliberate. It was executed. It was based on a strategy that we've executed pretty well over the last 5 years. And so while we've kind of 10x'd our business in half a decade or so, it was very methodical. And so a lot of people will look at that. And the reason why I say that as a point of reference is a lot of people will say, hey, I want to 10x my business. But what they don't have is a methodical, strategic approach to it. And so they end up always hitting a wall and going backwards, hitting a wall, going backwards. And so what I highly recommend is if you have a strategy and you stick to it, the 10x will come as a byproduct of it, not something you're going after.
Boom. That's fire.
Yeah.
So through that journey, can you share a little bit of time? Obviously, there is a picture on Google that I absolutely love. It shows the high, the valleys, and the mountains that the entrepreneur's journey is.
Yep.
Can you share some moment that, you were, I guess, hitting the rock bottom as part of your business? Maybe not rock bottom, but that you hit those valley, and how did you come out of those?
Yeah, I mean, so I think it happens to every entrepreneur. It's funny you mentioned that chart because it was actually in a presentation that I did yesterday.
Are you serious?
Yeah, so and it was actually literally the exclamation point of the presentation I did yesterday. So I back to speaking at talking about collective genius.
Let's go, CG.
There we go. I was speaking in the CEO room. So if you're not familiar, they've got kind of collective genius, but then they've got collective genius CEO, which is kind of the top tier group, if you will, inside of the CG. And we were speaking about really what are the 10 things that the best real estate entrepreneurs today are doing differently than the rest, right? The ones that are struggling, the ones that are not having the success to that level. And the last slide was that picture. And the reality of it was, the first 9 things, and we talked about cash position, and we talked about debt, and we talked about, your rental portfolio, and we talked about hiring, we talked about all these key things that great entrepreneurs were doing. But the reality of it is the ones that are having the longest term best success are the ones that are staying even killed. They don't get too high when they have a great day and they close that deal, they close that sale. They don't go out celebrate and have $1,000 steak dinner, and they don't get too low whenever that deal doesn't go through. They don't try think about firing. They don't lay off payroll. They don't do any of those things. They just stick to their strategy. And so, what I would say is the most difficult thing about being an entrepreneur is the personal side of it. The personal side of, are you able to control both, managing a business and managing that side of it, and also manage your life. And so if you can get that entrepreneur part where you're kind of even killed, no up, no down, now you can focus on kind of the harder part of being an entrepreneur, which in my opinion, which is balancing personal and business.
Yeah. So how have you done that? How have you balanced your personal life and also the business side of things?
Well, the process is ever evolving, right? I'm still learning about it and still learning how to do it well, right? I will tell you that, it's something that from a time perspective, I don't have it figured out. I do think from a financial perspective, we have a process that works really, really well for us. And for those of you that, again, in most marriages and most relationships, the financial piece is really the piece that if you don't figure that out, it tends to take a turn for the worse there. And so I feel like that's one of the things that we've probably figured out, and I could advise on, which is, we have a situation where no matter what, every single month, money goes from the business to our personal account. It's the same amount every single month. The family knows what it is. They know how much it is, and they know it's there to spend. And I don't care if it all gets spent. I don't care if some of it gets spent. It doesn't matter. But what they know is they can count on it. There's no risk. There's no concern. What a lot of entrepreneurs come in and do is they go in and they say, okay, well, I had a great month. I'm gonna take $50,000 out of the business this month, and then next month was not a good month, so I'm only going to take $1,000 out of the month next business. Well, guess what? Your family feels that, right?
Yeah.
They didn't sign up for that entrepreneur up and down, right? And so instead of taking that $50,000 out in the good month, well, why don't we just take $10,000 every month, right?
Yeah.
And then now your family feels good. It's in the bank still, right?
Yeah.
But it's setting out there. So what I would highly recommend, if you're looking at how do you improve that side of your life, get yourself on a salary, right? Same amount every single month. Let the family know this is how much we're going to have to spend, and then the leftovers, pay that out quarterly, right? And that's just bonus money. And that's, hey, I can either I can put it in my personal account. I can go on vacation with it. We can go and add more equipment, right?
Yeah.
Whatever you need to do in order to whatever makes sense. But if you have that consistent drip every single month, that's that security that most people want, most families want, most families need to really focus on what matters, which is the relationship, being on the same page, communication, all of those things. What I find is once you figure out the communication piece, then you can talk about everything else, right? Everything else becomes more of a priority. Awesome.
I don't want to gloss over this because I think this is going to be something very important that we chat on. As part of your presentation, and that was the marquee of that presentation yesterday, talking about the entrepreneur ups and downs.
Sure.
And you mentioned how it can be like even kills. Is that how the word that you used for that? So how can an entrepreneur do that, like in their business, to make sure that, like, things are working very well and they're not going to that ups and down all the time?
Yeah, yeah. So, well, first off, you got to kind of know who you are, right? So what are the things that bring you up and down? And for most entrepreneurs, it's going to be the excess or lack of cash, right? It's where the emotions typically start. And so what we highly recommend is that you have a high level cash management system. In that room, we were talking about, hey, you really, if you don't have $1 million in cash, that's really where you need to be at. Now, for every entrepreneur, is that the case? No. That room is a room that the level at which they're at, they should have $1 million in cash. And so in CG, a lot of those people, that should be kind of the mark that they look at. And what I was trying to explain to them was that the entrepreneurs that we see that are having the most success are the ones that are cash rich. Now that seems obvious. You're like, oh, okay, well, of course, Marcus, they're making more money. Not necessarily. They're not necessarily making more money. They're just utilizing it more wisely. They're keeping it. They're not doubling down. They're not necessarily, there's a hot button topic right now, which is scaling. That's what's really getting me in trouble on Facebook right now. I keep talking about the scaling word. People don't like it, but I think what they're realizing is they don't have to always double down. I don't have to, okay, well, this month I spent $10,000 in marketing. Next month that works. So next month I'm going to spend 15, and the next month I'm going to spend 20. At some point in time, you're not more profitable because you're spending more and more money. So we focus on cash, number one. If you want to, you lose a big account, you lose some revenue. If you got plenty of cash in the bank, next play, right? Alan, I think it was Alan Stein the first day, right?
Yeah.
Came in, and for those of you guys that don't know, he was a coach for Kobe Bryant and Steph Curry and some of the best NBA players in the world. And he, anyway, talked about, really you have to think about the next play.
Next
right?
play. It's funny that you say that, because I posted something this morning, and that was like one of the main takeaway from his presentation when I was like walking around and doing all of that. The next play. I thought that was like so good.
Oh, so good. And it's easy to say, right? It's easy to say, okay, next play. But if you're not in a cash position to really go to the next play, it's kind of like, okay, well, our buddy Steve Trang, next play, he's got a torn Achilles. There's no next play, right? So, when you're sitting in your business and you don't have enough cash, it's kind of like a torn Achilles in your business. You can't go to the next play. You're going to shoot a free throw and you're done for the season.
Boom.
And so that's kind of where we start with. And then from there, we look at having the right people on the bus, right? So we talked in that group specifically, we really talked about when you get that right number two and how to serve that number two, whether it's, high level profit share or equity or those kind of things. But when you're a CEO, it's hard to be called the CEO when you don't have a COO or some second in command there. So we really talked about the benefit and the value of that. But let's bring that down to not the high level entrepreneur, but the everyday entrepreneur. And so what I would say for that everyday entrepreneur is that person's an executive assistant for most of us, right? Once we get to a level where we are consistent and we're able to put some cash in the business and we're able to generate revenue consistently, what most entrepreneurs really need to be thinking about is that executive assistant role. That's your first COO. You don't know it yet, typically, but that's your first COO. They're taking care of all of the little things that you can take care of, that you don't need to be taken care of, so you can focus on revenue producing activities. And so that's another piece of the puzzle there. And then the last one of the 10 that is probably worth discussing here is debt, right? And so we talked heavily about, what bad debt is and how people in the market today are looking at debt. And obviously, interest rates are a hot button topic in real estate, but it's interesting because I'm seeing even people that have 3 and 4% interest rates paying off debt, right? And paying off debt because they don't want the debt in their portfolio. They don't like the risk anymore. And so you're seeing some of those things, but we really started talking about bad debt and defining bad debt. And so what I define bad debt is any debt that doesn't pay itself off. And so if you think about it, That's a car. It's a credit card. And this is the one that everybody likes to debate, but your house.
Interesting.
You know?
Yeah.
And so
your house is a bad debt.
think about that for a second.
Interesting.
You know, it doesn't pay itself off.
Yeah, I always thought it was a great asset because
It's
obviously
a great asset. It's bad debt, right? So, and we're talking about long term. Okay, I'm not saying if you got $50,000 in your last $50,000 go pay off your house. I'm not saying that. What I'm saying is if you want to become financially free, having a paid off house is part of that process. And so getting rid of all your bad debt that it is not paying itself off, that somebody else isn't paying off for you, rental, business debt, some of those kind of things. That's how you truly get out of that financial freedom, because part of financial freedom is revenue. Hey, money coming in. The other side of it is money going out. So if you can say, hey, I don't have that $3,000, $4,000, $5,000 mortgage payment. Yeah, it's only 3.5% interest, but it's also $5,000 a month.
Yeah. You touched on something over there, and I feel like a lot of people watching this might be very interested in learning. What are some of your top advice for somebody to go financially free?
First off, you got to define what financial freedom is for you. I was talking to a gentleman we both know. I won't mention him on the podcast because I didn't say I would, but we were talking about his definition of financial freedom. He's like, hey, I need to get, and for those of you guys that aren't at this level, don't feel that this is the case, but he said, I need to get to $100,000 a month. And that's what I need to get to. That was how he defined financial freedom. And of course, my question was why? Why $100,000 a month? And he said, well, it takes me $25,000 a month to live. And I said, okay, what about the other 75? What are you doing with the other 75? And he's like, well, I got to keep growing, and I got to keep doing this. I got to keep doing this. I'm like, okay, well, where are you at today? He's like, well, I'm about at 50. I'm like, okay, well, you have $25,000 of expenses. You have $50,000 of passive income. My friend, that is financially free. You just haven't created a life that is financially free, right? You actually have the money that's financially free, but it's not creating the life that's financially free. And so you've got two pieces of that puzzle, because really and truly, financial freedom is just making more money every single month than money that's going out the door.
Yeah.
That's all it is. It could be his number, $100,000. It could be $10,000 a month and $5,000 in expenses. And so, what I see, if I was to say, hey, every entrepreneur should shoot for this number and then wake up and talk to me again, I think it's $20,000 a month after tax. So that means in your bank, that is enough to have a good, great life, good cars, good schools, good housing in most of the country. California, New York, some of the areas that are maybe a little bit more expensive, $20,000 a month might not cut it. Maybe we've got to go up a little bit. But for most of the country, $20,000 a month after tax should be financial freedom for most of us. Not all of us can stay under that expending threshold, but that's usually a number I tell people. And when I talk with people that have been financially free and have made a lot of money, they're like, yeah, it's about right. Give or take, that's about right.
Yeah. To talk about that too, you kind of triggered another question for me, and I think a lot of people always talk about that is how much money should I have in the bank to make sure that everything is going really well. And some people say X months, some other people say, another Y.
Yeah.
What do you think? How much money should somebody have in the bank as a business owner to make sure that they are taking advantage of other things, but also mitigating risk?
Yeah, great question. So you've got two pieces of the puzzle. So as a business owner, we've got our personal life, and then we've got our business life, if you will. And as much as we want to keep those two separated, we know they don't separate. And so we actually got to look at two calculations. What's our personal reserves? What's our business reserves? And the reason why we want to look at both of those is how long can I go without writing myself a check? Personal reserves tells you that. Business reserves tell you that, right? And so once you combine those two together, that's really what gives you that security. So we like to start with, no matter what, 3 times personal expenses, 3 times business expenses. Once you get to those levels, you want to get to those levels before you go and start spending more money. And so a lot of people ask the question, okay, Marcus, when can I start spending more money? Okay, I saved to the point. When can I start spending more? When you've saved to that spend, right? So let's say, let's just use some simple numbers here. Let's say your monthly business spend is $30,000 a month, and you need to have 3 times that. So you got to have $90,000 in the bank. Okay, cool. You get to $90,000. You're like, okay, Marcus, I did it. I want to hire a new videographer. I'm like, okay, Marcus. Okay, Jet. What's the videographer going to cost you? $50,000 a year. Okay, cool. $50,000 a year. Let's call it $5,000 a month for easy math. So now your expenses are going to be $35,000. So you need to have 3 times that, or $105,000 in the bank before you hire that person.
Boom.
Well, now you got them already paid for, right? And so if you can't get to the cash number with today's expenses, you can't get to the cash number with tomorrow's expenses either. So get to the cash number you want to be at today first, and then you can take on more expenses. And when you do that, you'll find out that you can scale much faster.
I love it. So why 3X?
Well, I say we start at 3X for 2 reasons. Number one, again, we're thinking about the 2 different sides of the business. Well, that now gives us 6 months worth of, hey, I can still pay myself before the business is completely gutted. Well, that's if we have 0 revenue. That's if we don't make any expense adjustments. That's it. That's if we were operating as usual. We wouldn't operate as usual. So really that 6 months probably buys us a year's worth of, hey, we've got to do some corrective action in order to get back to a profitable spot. And if I'm going to be honest with you, if you can't figure it out within a year, maybe this isn't the thing for you, right? I really like 6 months. I'll start at 3, I get to 6. Once we get past 6, there's an argument that you've got too much cash, which is a such thing, in the bank, and you need to start investing it in whatever it is, equipment, people, processes, or take it out of your business and go invest it into other passive times. That's people always ask, Marcus, when do I start investing in real estate or the stock market or whatever? Whenever you can't continue to invest in your business for it to make sense, right?
That is funny that you say there is a thing as too much cash.
Sure.
Can you elaborate on that?
Yeah, well, I mean, so at some point in time, you don't want to keep spending your business's money, right, on new things. Maybe your studio's perfect. You've got it the way you want it. You've got the people you want. You're growing at a pace you want to grow at. You don't want to spend more in marketing. You're good. So you're consistently making more profits, then you can reinvest back in the business, and you don't need to spend all the money, right? I mean, you can go buy a bigger house, you can go buy bigger cars, but at some point in time, you can't spend it all. And so that's when you get to a spot and you're like, okay, well, there is too much cash here, and that is another problem. It's a good problem. We all got problems, but that's a good problem to have, but it is a problem nonetheless. And now I've got to take this money and I've got to go figure out something to do with it, which now becomes the next level skill set. You spent all this time to learn how to become an entrepreneur. You now have to become an investor, right? Different skill set, different terminology, different way of looking at things. As an entrepreneur, we want to make 100%, 200%, 300% return. As a investor, we're like, 8% is great. We'd love 8%, And so it's just kind of it's this phase of your business. And what you don't want to do is try and get there too fast. Don't say, hey, I got plenty of cash now, I'm going to go dump it in here. Let's make sure that you've actually got the right cash and you've exhausted your growth opportunities.
Absolutely. What are some of the biggest financial mistakes that you see business owners currently make?
Well, we just hit it, man. I'll tell you, the leverage or the liquidity that business owners have in their business. I've never seen somebody, and it's funny, I've never seen somebody complain that they have too much cash in the bank, right? It's a problem. They don't complain, and they're like, hey, I got to go do something with it, right? But I've never seen somebody complain about having too much cash in the bank. I hear all the time, I don't have enough cash. I don't have enough money, right? And so if I could shed one piece of advice that we could get to the audience, it is focus on building cash, because cash creates opportunity, cash creates liquidity, and ultimately cash creates access to capital. And that's something that a lot of people don't realize, is that the bank doesn't want to lend somebody that's broke. Lenders don't want to lend people that are broke. They want to see people that have good, solid financials, that have good liquidity. Yes, they want to see a decent credit score, but that's individual stuff, right? When you're a business owner, they want to see good financials. They want to see a good balance sheet. They want to see good habits. They want to see your cash account growing. And then they're like, hey, Mr. Entrepreneur, how can I help you grow your business? I want to hand you cash at this interest rate, and life becomes a lot easier versus, bank, please give me some money. I got to pay payroll tomorrow. That's where we want to be.
Yeah. I'm glad that you touched on that, because one of the questions that I had for you is, can you share a little bit about the importance of clean and good books?
Well, it's everything, right? It's the foundation of everything that you do in your business. So when we talk about clean and good books, we're talking about the financial records of your business. And that's the heartbeat, right? That's it. That's everything that your business is doing. It tells you what is going right and what's going wrong in your business. Now, if you don't understand those things, they don't do you any good. But you do need to have those good books, those good records, and you need to understand how to analyze them. And ultimately, without them, it's like driving a car without a dashboard, right? Can you imagine driving down the freeway and you've got a speed limit sign out there that says 60 miles an hour, but you don't have an odometer that tells you how fast you're going?
Yeah.
You might be in some trouble, right? You're going down the road, but I don't know if I'm going fast enough. I don't know if I'm going the right direction. I just know I'm going.
Yeah. I know some people talk about all the time, like, they check their financials every single day, or they check it every month. What is a good rhythm for somebody to know what's happening in their business with their books and all of that?
Yeah. So I like to check cash every day. And again, probably theme of the podcast, cash. I like to look at my
Cash is king.
That's right. I like to look at my cash balances every day. I like to look at my cash flow on a weekly basis. I like to look at my profits and my balance sheet on a monthly basis. And then I like to put it all together on a quarterly basis, right? And so every single day I'm looking at my cash. On a weekly basis, I'm looking at my cash flow for the week. How did I do for the week? Am I up? Am I down? Is there something I need to kind of pay attention to? Because even if you're looking at it at a daily basis, you're not seeing the trend, right? I know on the second week of every month, my cash flow goes down that week because I have payroll that comes out, but the cash doesn't come in that week. So I know I have an expectation. But if the third week comes in and cash goes down for that week, I'm going to wonder why, right?
Yeah.
And so, that allows you to start getting into a rhythm as a business owner, and you can start seeing and feeling what the best decision making is. And so people you asked me earlier, why are books so important? And people also ask me, why do I need to look at my financials? I don't even know what they mean. Because at some point in time during the day, you are making a decision. Who make thousands of decisions every single day. Subconsciously, you're going to have your financial information in your head. If you're looking at it, just like we said, daily, weekly, monthly, quarterly. Do you want to have the financial understanding of your business when you're when you're making these decisions throughout the day? Do you think that's going to improve the business decision? Yes, absolutely it will, because you're going to know, well, hold on. Do we want to invest in that because this is week 3 of the month and I expected cash to go up, but cash actually went down. So we need to take a little deeper look at that before we just say yes.
Yeah.
You know what I mean? And so what it is you become subconsciously more aware of your numbers. I'm not saying you're sitting here like, those movies where they got the numbers just kind of above your head and you're kind of calculating them all. That's not what it is. But what you have is now subconsciously, you're able to make better decisions and get better results. And then once you stack that up over a decade, man, you're so far ahead of everybody else.
Absolutely. So for a lot of entrepreneurs, obviously there is levels to this. Some
Sure.
people, they might be doing everything themselves.
Yep.
Some of them might be hiring like a bookkeeper, and then some other people might need like an accountant.
Yep.
Can you explain what stages in the business where you would need to kind of hire an accountant versus hiring a bookkeeper?
Yeah. So Let's talk about the stages first. So we like to kind of define the stages in 4 different stages. So you've got the hustle stage, you got the secure stage, you got the expand stage, and then you got the exit stage. And so when you look at that hustle stage, that is really where you're grinding it out. This is where you're trying to put that money in the bank. You're trying to kind of really establish, go from being maybe a dealer, somebody that is just doing deals or just cranking revenue, to actually owning the business, right? In that hustle phase. And so during that phase, you should go from, hey, I'm kind of keeping up with my own books, which is how you're going to start and how most people are going to start. Unless you're fortunate to start with a little bit of cash and maybe you have some investment to be able to invest in a bookkeeper, which if you do, it's a really, really good investment. But for most of us, we start doing our own books kind of in the hustle phase. Maybe it's through Excel. Maybe it's through a shoebox of receipts. Maybe it's through a couple of those maybe done strategies of doing your books. But once you go from the hustle phase to the secure phase, you have to get a bookkeeper and an accountant. And generally, you're going to start with an outsourced option. You're going to find a company, and I highly recommend you find a company that is specific to your niche. Hey, they know exactly what you do. They know exactly how you do it. They have a templated set of balance sheet and financials, P&L, cash flow statement that they do for all of their other clients that are just like you. They talk your language. They know what you're doing. And so that first accountant you hire, most people hire their dad's accountant that he's been working with for the 30 years that knows nothing about business. Great tax, individual person, but you're a business and you're an entrepreneur. So that first, the ones that are very successful when you go from doing it yourself and kind of keeping it on a spreadsheet or a shoebox or whatever you do to that first accountant, it's going to be outsourced and it's going to be niche specific. Don't care about where you're at. You can get a niche specific accountant anywhere in the world and they can help you and be greatly more impactful than somebody that just does whatever and can kind of do a little bit of everything, right? It's kind of like having a surgeon in your business versus having a general practitioner. Well, if you know you're going to need surgery, let's skip the general practitioner and go straight to surgery.
Yeah.
So if you do that, and a lot of people, for a lot of businesses, that's as far as you need. Maybe you'll add a fractional CFO where they take those numbers and they help you understand them and spend some more time with them. And, a lot of people can just outsource that piece of the puzzle. But then if you want to get into the expansion and really start growing and taking it, your business to multiple 7 figures and maybe 8 figures, now you're talking about, okay, I need to bring that specific in-house team to run my books, run my numbers, help create forecasts, help create projections, help manage my cash flow, do all of the day-to-day activities that, take an entrepreneur that it takes for an entrepreneur to expand and really get to an exit point. And so, sometimes you can, depending on your business, you can outsource that forever. And sometimes, we work with multiple businesses that have gone through the exit and we've seen them through the exit and done the accounting for them the whole time.
That's fantastic.
And so, so you may never have to hire an in-house team. And for probably a lot of entrepreneurs, they're like, oh, thank goodness I never want to have to manage a team of finance professionals because that's tough, right?
Yeah.
And so, that's what we typically see as a good process is kind of, and I want to encourage you, for some of you guys that are out there, like, I'm never doing this myself. Do it yourself. There's 2 reasons I want you to do it yourself. First off, you can get an understanding for what you're actually doing. And accounting is one of those things that, very few entrepreneurs are able to hold accountability towards accounting, right?
Yeah.
Because they don't know it. They know sales, they know marketing, they know their trade, right? They know all that stuff, but they don't know if the books are done correctly, right? And so the sooner that you can kind of get your head wrapped around, okay, what are the books? What does this mean? Yeah, it's a little exhausting today, but long term, for the next 30 years, puts you at such an advantage. So I wouldn't be afraid to do it yourself for a little bit. Now that when you outsource it, you kind of know what you're talking about, and prevents you from potentially getting yourself in some trouble.
Absolutely. One other thing that I've seen that you shared a lot on social media is tax planning strategies.
Sure.
I feel like you are a wealth of knowledge on that, and I would love to touch on that. What are some of the tax planning strategies that that you help people with out there?
Yeah. So our team, of course, on our accounting side and CFO side, we're all about trying to help people make profits, which now creates another problem, which is profits create tax. And so, throughout somebody's life, the tax expense is their largest expense. Maybe not every year. For a lot of people, we've got plenty of clients that don't pay taxes at all in a given year. But throughout their life, generally taxes are your biggest expense. And so what we do within our company is we created a tax planning process. And it's not a strategy. It's not, hey, you need to just go do this one strategy. It's a full process that starts with the basics, which is the entity structure. So when we go through and we look at an entrepreneur, we're looking at first, how is their entity set up? Are they set up in the right way? Are they set up in the most tax efficient way? And for a lot of our clients, right there is where we start the large tax saving strategies, right? We get them in the right entity structure, we get them set up the right way, and get them in a spot where they can scale and grow, right? A lot of them are in the hustle phase at that point in time, or maybe even the secure phase of their business, and they don't know. They just opened up an LLC, maybe got on LegalZoom. Hey, we're taking action. We're getting after it. We're going to do this, but now we got to kind of secure what we're doing. So we come in, get their entity structured, or maybe they're big and they've got a mess. Still, got to start with entity structure. It all starts there. From there, we take that entity, we get them all squared away, and then we go to what we call the entrepreneur tax strategies. And these are going to be the tax strategies that any entrepreneur has available to them if they do the right actions. And so what does that mean? That could mean writing off your car. That could mean utilizing your personal residence for business use and taking some write-offs there. It could mean using your home office. There's a number of different strategies that we have out there that are available to you as an entrepreneur, but you have to go through a couple loops. And some of those hoops are not worth going through for some people, and some of those hoops are. And everybody's a little different. And so we talk them through, okay, you want to do this one, you don't want to do this one, okay, great. Now we've gotten through phase 2. The final phase is what we call our custom strategies. And so we've got the entity structure, we've got the entrepreneur strategies, and then we go in and we look at their custom strategies. And this is all based on, okay, what are you worth and how much are you making? Once you get over a certain income threshold, the number of strategies opens up for you. So we can start looking at different charitable planning strategies. We can look at different trust strategies. We can look at different asset acquisition and disposition strategies. And so then we can start formulating, okay, well, now you're making $300, $400, $500, $1 million, $2 million, $10 million, right? And now we've got to really start thinking about, okay, what do we need to be doing with all this money, and how do we not pay 6-7 figures in taxes? And so that's where those custom strategies come in of, what do you want to do? Do you want to deploy some capital in this type of an asset to get some depreciation? Do you want to, what does it look like? And so everybody's completely different there, and everybody's goal is completely different. And, it's interesting. I was in that group, in that presentation I did yesterday, one of the things I said, and this is the truth. This is the God's honest truth, and maybe is maybe not what most accountants will tell you, but there are two different types of entrepreneurs out there when it comes to tax. There's one side of it that says, you know what, I don't want to know anything about tax. I don't care anything about tax. And just tell me how much I owe and I'll write the check and I'm going to keep making more money. Great. And I've seen so many entrepreneurs be very, very successful with that route. There's another entrepreneur out there that they're like, hey, I don't want to pay the government any more money than I have to. I'm going to, whatever I need to do, I'm going to understand it. I'm going to reduce my tax liability. Whatever I can do, I'm going to focus on that. And that works well. That works really, really well too. And we work with those entrepreneurs all the time, and we see that success. Where we see the lack of success in tax strategy is in the middle. When you're like, yeah, I'm kind of going to do this, but it's kind of halfway. Hopefully it saves me a little bit of money. The IRS is never going to find out. And even if they do, it's okay. No, that's where you get yourself in trouble. So what I would tell you is, if you're an entrepreneur and you're like, I don't know much about tax strategy, and I really hate the tax strategy side of it, and I don't understand it, then maybe you just need to stay out of it. And that's okay. There's a success path of sitting there and saying, hey, I'll just do what I can with my tax strategy. You never want to overpay, right? But I'm not going to do anything other than just make money. And that's what I'm going to do. And by the way, I'm here to tell you there's some people out there that they write some big checks and they make a lot of money, right? And that's okay. And then there's that other path. But if you go down this path of where you want to understand tax strategy and you want to get your tax strategy down, yes, you can hire professionals, but you need to understand it. You're signing your tax return. No matter what, you can hire as many professionals as you want. You're the one that signs your tax return, so you need to know what's on it and how it impacts you, not just today, but for the rest of your life.
Absolutely. There is one thing that you mentioned over here, and I would like to maybe dig a little bit deeper on that. What are some of the steps or things that somebody can do to diminish the amount of money that they owe to the IRS?
Yeah, so the IRS has, generally the concept of if you make it, you got to spend it not to pay tax on it, okay? And so the first thing I talk about all the time with people is you want to pay less money in taxes, you need to spend more money, right? That means reinvesting in your business. That means reinvesting in equipment. That means they reward you for this. And we don't always think about it that way. We think about, oh, okay, well, I got to spend money to get a deduction. Well, what if we think about it a little differently? What if we think about at the end of the year, maybe we have a little tax liability that we need to solve, but maybe we have some great employees. And so instead of just going and spending money on a car like some people might do, maybe you go and give your employees a bonus. Well, hey, you can still get a tax deduction for that. And guess what? You get a happy employee. Well, you think a $5,000 bonus you're going to get that out of your employee next year? Of course. They're going to be loyal to you. They're going to love that. And so the first way to reduce your tax liability is to find creative ways of reinvesting back in your business, right? But we look at real estate strategies all the time. So that's a good paper loss strategy. But if you're not a real estate investor, it really doesn't apply to you. We look at things like the Augusta rule, which is also kind of a paper loss strategy, which is, you guys can go look it up. We won't go into the details of it too much, but basically you're able to rent your house out to your business and take a deduction for that. So we look at some of those strategies that are available. Of course, anytime you can buy a vehicle that makes sense in your business, you should, but we want that to be an investment, right? There's no reason to let the tax tail wag the dog, if you will. I would much rather you pay $30,000 in taxes than go buy a $100,000 truck that you spend $100,000 on. And by the way, it's worth $70,000 tomorrow.
Yeah, absolutely. One other thing that I've noticed that you shared, I don't know the specific of those stories, but I would love for you to touch on them. But a few times on social media, I've noticed that you say that you've saved somebody so much money. What are some of the strategy? And if you have any stories that you can share on how you've helped somebody save, like, I don't know, $50,000, $100,000, something that they weren't even aware of that they could be saving as part when you were doing those strategies with them. Can you share any of those stories / strategies that they can utilize to maybe even find those types of money that they could be, getting?
Yeah, it's hard because once you start looking at those types of levels, they're very custom strategies generally, and they're very specific, and we're going to get into some very detailed stuff there. So, what I'll tell you is this. I think this can be valuable to your audience here. What we are about to go into is another environment where when you put assets into service into your business, or you put assets into service, period, you're going to get massive depreciation benefits for that. That's assuming the tax code goes through, which I expect it to sometime this summer. With those benefits, that is how you are going to be able to save $50,000, $100,000, $200,000 in taxes, because what those benefits are, it's called depreciation. And that depreciation is what, everybody asks, okay, why do real estate investors not pay any taxes? Well, because when they buy an asset, they get to use this depreciation to write off their income against that asset. So that asset, while it's not shrinking in value necessarily, they are getting to take that write-off against their income. Well, not all not all people can do that. Only real estate investors. So what I will tell you, if you are an entrepreneur and you are looking to, and you're making great money and you need to find tax strategies or some tax loopholes for you and for your business, I would look at real estate, and I would look at how real estate could be impactful to your business and to your life. And I can tell you that there are stories after story after story of where entrepreneurs have found a way to break into the real estate game, buy assets, offset their tax liability, and ultimately have a bunch of assets that they would have not owned. The IRS would have taken their money, and they ended up with assets instead that they could defer those taxes for a long term. So the big play to save a bunch of money in taxes, and we'll call it the easiest way of doing it, it's going to be through depreciation. It's going to be through buying these assets, and ultimately it's going to be kind of planning towards that. Now, not everybody can just take advantage of that, so you got to be planning towards it. But if you can figure it out and you can figure it out for yourself, the other side of that could be, like I said, tens of thousands of dollars worth of tax savings. Let's step back. For those of you that don't have a huge tax bill, that maybe your tax bill is $10,000, maybe that's huge to you. You are not making enough money today to focus your time outside of anything other than what you're doing. I know $10,000 is a lot of money to pay the IRS. So will $20,000 when you write that check, and so will $30,000 when you write that check. But what I want you to realize as an entrepreneur, like you said, there's levels to this thing. And when you start diverting your time and attention to trying to save that $50,000 in taxes, there's an opportunity cost there. And that opportunity cost could mean that this business over here starts to get a little shaky. And so don't do it too early. But when it's time and you're in that spot, real estate's a really good spot to be in.
I love it. I love it. So at the very beginning, we talked about like financial excellence. Can you share with me, what does financial excellence mean to any business out there?
Strategy. I think if I could give you anything, that's what it is. It's make your money go where you want it to go instead of where it wants to go. Money is going to flow. It's meant to flow. It's always going to flow. People talk about cash flow. That's just money. Money never sits still. You go put money in a bank. It doesn't just sit there. It moves. It earns interest. It gets reduced. You take money in and out. So money is going to always flow. You need to understand it. You need to understand the flow of money in your business. And so when you understand financial management, and most of that is cash, most of that is surrounding cash. Once you get that figured out, the business doesn't matter. The business principles are the same. The output is different. Your business is no different than my business when it comes down to financial excellence. Yeah. We just simply need to utilize our talents to manage the cash flow of the business, to maximize the cash flow of the business. And ultimately, if you're consistently focused on that, that's financial excellence.
I love it. What do you think is the number one key KPIs that any business should consider in their business right now as it relates to financial excellence?
Yeah, well, you're not going to believe it. It's going to be cash, right? So when we do a dashboard, so we have a dashboard software that we utilize, and we have kind of categories for our clients as they are looking at their monthly KPIs that we have for them that are standard. And our first KPI bracket is cash, and we're looking at cash position, we're looking at operating cash flow, we're looking at net cash flow. Those are the three first things, and we're looking at it for the month. And then we look down, and our next level of KPIs, we're looking at profitability metrics. So we're looking at, okay, how much operating profit did we make? What was our expense ratios for the month? What was our our gross profit ratios for the month? So that we start looking at that, and then we go down a little further, and we go into revenue. So notice the process. We start with cash, then we look at profit. Now we look at revenue. Revenue is the third thing on my list that we're looking at. So I'm looking at revenue categories. Where's the revenue broken up by? What should it be broken up by, right? It doesn't matter the business. Every business can operate at this level, right? Yeah. And then we go down. The next level is liquidity. I'm looking at how much How much debt do you have? Do you have the right liquidity? What's your break-even point for the month? What's your break-even level of expenses? So how much revenue do you need to bring in for the level of expenses that you have right now, right? So all of those things are KPIs that we're looking at, and ultimately, what you wind up with there is kind of a number of categories that tell you, okay, I've got cash flow, I've got liquidity, I've got profitability, I've got revenue. And then the last one that I didn't mention was my expense metrics. So I've got just a category where I've got my 3 core expenses. And there's 3 core expenses of every business: advertising and marketing, human capital, general and administrative. Those are the 3 big expenses of every business. Every business has more or less in each one of those categories, but that's it. And we just look at those 3 and kind of see how they are performing month over month, year over year, and see what their trends are. And once you kind of build out that little KPI list, that's everything you need to know. You don't need a balance sheet. You don't need a P&L. You've got kind of what you need there with those 5 main categories.
Awesome. One of my great friends teaches a lot of the time for like new entrepreneurs or like, coaches or experts just starting their business. He teaches them revenue and first position.
Yeah.
What do you think about that? Since you were talking about the KPIs and all of that, what do you think about that ideology, revenue and first position?
Yeah, well, I know exactly what you're talking about because I've heard it myself out of his mouth. So, so revenue and first position is just a concept that every day you wake up and you've got to focus on revenue producing activities. And so, I completely agree with that. I think, again, as a small business entrepreneur, that's where we need to be. There are businesses out there where they're the CEO, the owner of the business. That's actually not their responsibility as revenue producing activity. But I would say 90% of us, anybody that's considered a small business owner, me, you, the majority of the country, anybody that's doing less than $50 million in revenue, which is the majority of us, they need to wake up doing revenue producing activities.
Awesome. I love it. What are some of the big mistakes that you see people make as it relates to like keeping track of their revenues and expenses, and how can they solve that?
Well, I think it's the last place to scale in your business is typically your finance department, right? So it's easy to scale sales. It's easy to go buy more marketing spend, right? It's easy to hire another person, right? But most of the time, you don't really understand how to scale your finance department. It kind of goes back to what we talked about a little bit earlier. And so really the mistake that people make is not getting the help they need fast enough. And so they come to me and they've got, okay, well, we're doing, $1 million a year in revenue, and we've got all these transactions and we don't have any books and records yet. And now I've got to go create, a year or 2 years worth of books and records. And, it costs me a whole lot more, costs you a whole lot more for me to go fix it all and versus keep it all up. And so, what I could recommend you do first and foremost is ensure that you don't lack scaling your finance department. If you can, and when I say scaling your finance department, it just means growing it, right? We talked about the process. You're going to start by doing it yourself a little bit, and then you're going to outsource it to a industry-specific professional, and then you might bring that in-house if that makes sense. But if you don't outsource it soon enough, if you say, hey, I'm going to do it, and then you never do it, and you're like, or you never actually learn how to do it, then you wait a year, 2 years, you might have to pay somebody $20,000, $30,000 to figure it all out for you.
Yeah.
Nobody wants to do that.
Yeah. So somebody making money and they're still feeling like they're really still broke.
Welcome to entrepreneurship.
Yeah. What do you think is happening behind the scenes financially?
Yeah. What's growth? Right. So the only way you can make money and feel broke is because you're still growing, and you're growing faster than really your cash flow is allowing you to. So mentally, you want to be at a spot that your bank isn't allowing it. And so, what I find most of the time is it's an ego-driven decision, right? You're not on purpose. It's not a negative thing. It's like, hey, I want to do this. I can do this. I know I'm capable of doing this. I know I'm capable of performing at this level. And so I'm going to grow there, but I'm not necessarily, the bank account's not ready. Now, if I had money in the bank to do it, yeah, maybe I'm ready, but the bank account's not ready. And so you got to be ready. Your bank account's got to be ready for you to actually grow and grow in a sustainable way. And so that's probably what I would say there.
Yeah. What are some of the biggest shifts that you think somebody can make in their business right now if they want to grow from running a 6-figure business to a 7-figure business?
You know, I think you got to be a leader. Does that mean you need to hire a bunch of people? I don't think so. I think you can be a 6-figure entrepreneur. I think you can move to a 7-figure entrepreneur. And honestly, I think you could do it with a pretty lean staff. I'm seeing it all over the place. You know, we talked about having that number 2, that executive assistant, potentially even at that level. But you still have to be a leader. You got to be able to lead your vendors. You got to be able to lead your contractors. You got to be able to lead yourself. That's another thing that maybe we don't look at as as individuals, as being a good leader to ourselves. I mean, to be quite honest with you, if you want to be a 7-figure entrepreneur, but you're running your day to day like a 6-figure entrepreneur, you're not going to hit it. You're not going to get there, right? And so, what I would recommend is figure out that leadership trait that you're missing, and go execute at that level. And that, like I said, that doesn't mean you got to hire a bunch of people and you're like, oh, now I'm a leader. No, that means every single day, every interaction that you're dealing with, you got to have those leadership traits. And then naturally, you will grow from being a 6-figure to a 7-figure entrepreneur. And it's not going to happen overnight. Shouldn't happen overnight.
Yeah. What is one strategy that you wish more business owners would implement in their business when they are still at the early stages of their business? Yeah,
so I wish they would organize their business in a simple cash management way. We call it the triple threat banking system, which basically you have 3 bank accounts. You got an operating bank account. That's where your day-to-day money goes in and out of. You got your reserve bank account. That's where you're keeping your extra money that is come hell or high water. We got money to keep things afloat. And then you've got your tax account, right? That little buddy on your shoulder that keeps saying, hey, 30% of everything you make gets to come to me, right? So we want to make sure we save for him, because if not, we're in trouble. So operating account, reserve account, tax account, if we can get those and we can get those funded, you can get 3 to 6 months in your operating and reserve account, and then you can get your tax account filled up with 30% of your profits. Now you got yourself in a pretty good position to where you can grow, and you can grow stably. But I'll tell you, a lot of people talk about scale and growing fast. You can grow really fast that way, but you can do it in a secure and safe way. You just might not start growing for a few months, 6 months, 8 months, 10 months, a year. But once you get to the spot where your cash accounts are fully funded and you've got your cash account with your expenses, that correlation the right way, now you've got yourself a launching spot, right? When Tesla shoots off their rocket, they don't shoot it off from some piece of jello, right? They have a firm foundation of where they're going to shoot their rockets off and then where they're going to land them back to, right? Yeah. It's a big, solid piece of concrete that they have to rely on, and that's what your business needs to have. And that's what the cash, that's what the operating system, that's what the management system is it's a big foundation for you. And then you can launch your rocket. And then that's when you can grow, and it's very easy to grow. Most people lose it all because they end up going backwards. If you build that foundation, now you're not going backwards all the time. Yeah. You're building the foundation, and then your foundation's always moving with the growth. And so you can only go back to your concrete. So it's like, okay, I've grown a little bit, new foundation. Grown a little bit, new foundation.
I love it. This is a question that I always ask everybody. What is the number one piece of advice that you would give to somebody to make $1 million today?
No. Well, oh man, $1 million today. Lottery ticket. No, $1 million. First off, I would challenge the need for $1 million. That's what I would say. I would instead say, hey, go after the $20,000 a month after tax. Go build a business. Go build something that you can generate $20,000 a month after tax consistently every single month, and you've got enough money in the bank to where you don't have to worry about that ever being the case again. And then tell me if you still want to talk about the $1 million thing, because let's get there first. But that's what I would say is just consistency, because what will happen is once you get that $20,000 a month, once you can get there and you can get it consistently, it's a lot easier to get to 25, 30, 35, 40, 45.
I love it. So now we are at the part where we have the quick hitters.
All right.
Awesome. So the first question for you is, what are 3 signs your business needs a financial overhaul fast?
If you don't know your numbers, so if you don't know how much profit you made last month, there's number 1. If you don't know how much cash you put in the bank last month, that's number 2. And if you look at your bank account and you don't know how much money of your bank account is your money, that's number 3.
Awesome. And starting this, this is a question, I think that would be really good for Reels, but finish that sentence for me. If your revenue is growing, but your profit isn't, this is why.
You're growing faster. Your expenses are growing faster than your revenue. That's as simple as that.
Awesome. Here's what you do if you were starting over with $10,000 in a service business.
Ooh, 10,000. Oh, I like this one. It's supposed to be a quick hitter, but I'm not. I got to take a second here. I'd find the right room. Find the right room. Whatever the room was, I'd find the right room, because the right room is where the revenue is. I don't want to rely on picking up the phone and calling people and trying to figure out the list. No, I'm going to try and get in front of the biggest room I can with the exact amount of professionals that I want to do service for, whether it's real estate investors, whether it's photographers, whatever. What's that conference? What's that room I can get into where they're all there and I can put my talents on the line and say, hey, if I can talk to these people belly to belly, I think they'll do business with me. That's where I'd put my $10,000.
I love that you say that. And one of the biggest advice that I've received is community is very important, but the best collaborators win, and where you find those collaborators are in those types of rooms.
Right.
Talking about that, let's give a quick shout out to CG over here. What has CG helped you accomplish being part of the room for like 7 to 10 years now?
Yeah, well, it's funny because I would be considered an OG at CG, right? And so I've been around that room since 2017. And again, what you can learn in a room of entrepreneurs is incredible, right? You never know what you're going to learn. And I can tell you, I go to that room and I'm not a real estate investor. I don't own real estate other than what I live in, right? And so I'm not a real estate investor, but I always take things away from this meeting, and I always find ways to implement things into my business that are leadership traits, AI opportunities, technology opportunities, whatever it might be, HR, hiring strategies. There's so many different things that being in a room full of people smarter than you in different ways, right? We're all smarter than everybody in some way, shape, or form. When you bring them all together and people are willing to share their intelligence and be like, hey, I'm really good at this, you're really good at this, let's work on it together, amazing things can happen. And that's without even making a sale, right?
Yeah.
And so that's what's really cool about a room like that.
Absolutely. What was your number one takeaway from CG this week?
Oh, okay. Well, that's easy. Scaling is not built for everybody.
Can you expand on that?
Yeah. So I think when we look at business, I think we feel like we need to scale business, and the businesses that get the most press and that people are most astounded by typically are the ones that have grown really fast in a slow amount of time. We see it praised through the Inc. 500 list and the Inc. 5000 list, and we see people going and applying for these huge growth rewards, and that's great. And I think for certain businesses you should go after that. But I will tell you, the select few are the ones that actually accomplish it. And if you can realize that, hey, maybe I don't have to scale, I can grow. I think if you're not growing, you're dying, but that doesn't mean you have to sacrifice to the level of what scaling is. in order to actually be a successful entrepreneur. And so I think you can grow your business without scaling. And I think you can grow your business without putting your business, your family's lives, and the people that are working for your lives at risk because you want to go from $10 million a year to $100 million a year.
I love that advice. Thank you for sharing that. Earlier, you mentioned that over the past 5 years since you've been, doing your business and stuff like that, that you've 10x. What are some of the lessons learned or things that you've implemented in your business that has helped you 10x over the past 5 years?
Focus on the product. Focus on the product. At the end of the day, I tell my team all the time that while we are a accounting firm, we are a service-based business first. And so, the biggest thing that we can do is offer a good service, and the result of that is the result of our accounting. But we are, a service business first. And I think any business that wants to succeed in this world right now, they've got to be a service business first. You look at Amazon, they're not a national retailer. They're a service business. There's plenty of places to buy your toilet paper. You can go to Walmart. You can go to all these. They're a service business. They provide a service by throwing that toilet paper on your front door so you don't have to go get it. And so for us, instead of being an accounting firm, we said, hey, we're service first, accounting firm second. Yeah. And by that philosophy, we've had the ability to drive success.
Absolutely. As we're closing this talk show today, what is the number one advice that you would give to anybody watching this video today?
Make it and keep it. Our friend Jason Medley, owner of CG, right?
Shout out, Jason.
He says it all the time, right? Making money is a discipline, or making money is a skill set, but keeping it is a discipline. And he's right. He's absolutely right when it comes to that. You've got to be disciplined in order to keep it. And when you figure that discipline out, you're pretty dangerous. You're pretty dangerous, right? And so making it's the easy part, having the discipline, having the focus to keep it and put it in the right spots and say no, right? Say no to that new marketing channel. Say no to that new hire until you truly can't afford it, and you will be in a much better spot.
Awesome. So for anybody watching this and would like to learn more about Marcus Kriegler and also Beck CFO, how they can get a hold of you, and what are some of the things that you offer that would be a great assets to them?
Yeah. So beckcfo.com, you can go top right. We do a free consultation for anybody that wants to work with us. Now, we do work with real estate entrepreneurs only. So if you're outside of the real estate world, again, take my advice. You're in that, hey, go find that accountant that needs that focuses on your business, right? That knows your trade and knows your tricks of the trade. So, we're happy to be a resource to you. We have a ton of resources on our website of articles, strategies. We just put out a webinar a couple weeks ago on the new tax bill. So you can go to our website and get access to that. So we've got a ton of resources there. Also, I like to stir trouble on Facebook, so you can always follow me on Facebook. And I do my best to try and comment back when people comment on my post and share their opinion, whether they agree with me or not. It's always good conversation.
I'm super glad that you mentioned that. He definitely stir trouble on social media, and his content are really great too. So if you want to learn about finances and all the other thought leadership things that you're posting, sure, definitely give him a follow on social media, and you will not regret it. So, Marcus, it was such a pleasure having you on the show today. I think we could keep going, but it was a lot of fun learning a ton from you and sharing all the great thoughts that you've had. So, if you want to learn more about Marcus, definitely go to beckcfo.com or follow him on social media.
Awesome.
Marcus, it was a pleasure, man.
Appreciate you.
All right, let's go, baby. It's fire.